All right, on to the next session. So we're about to begin Beyond ETFs, Opportunities for Institutional Investment in Digital Assets. I want to welcome everyone to Colorado. This is actually my home state, and after 14 years of living abroad, it is awesome to come back here and stake some claim to the new territory of crypto. We have an amazing panel for you today, some experts in their fields that are here to talk about what their businesses can do, especially in the institutional side of things, to help you and serve your clients in a better way. So without further ado, my name is Nicolas, Cary. I'm one of the co-founders of blockchain.com. We started the company in York in 2011. Now we've expanded all over the world and are hiring people in all of our core offices in London, in New York, in Dallas, in Singapore, and Buenos Aires. So if you're looking for opportunities, definitely check it out. I'm also the author of The Future is Decentralized and the founding commissioner of the Blockchain Commission for Sustainable Development. So we've got a bunch of questions for our panel today, and we'll get right into it. So please introduce yourself. Tell us a brief little bit about your business, and also who might be like your most important customer or client into 2025. And we'll start with you, Mr. Fahmi.
Hello, everyone. I'm Fahmi. I am the CFO of Midnight. Midnight is a new ZK protocol that will launch later this year. Why do we matter? Who do we care for? Anybody who cares about their privacy. Anybody who cares about protecting their data, their identity, their assets. That is who we care about.
All right. So first question to you. As institutions deepen their involvement in digital assets, how should blockchain infrastructure evolve to support their needs?
Good question. So when we look at blockchains today, we talk about liquidity and assets and what is happening in DeFi and other sort of applications. The reality is most institutional asset managers or institutions, enterprises haven't come to blockchain in big numbers. Why? Because all blockchains expose your data, expose your wallet, what you're doing, who you are, what you are. You will get doxed. So you need privacy. Bitcoin gave you freedom. Midnight will give you everything back for free. Free association, free commerce, free privacy.
All right. We're looking forward to learning more about that. So down the line, we've got Leah Wald, President and CEO of Sol Strategies. Welcome to Denver.
Thanks so much. Thanks so much for having me.
All right. We want to hear a little bit about Sol Strategies. So tell us a little bit about your business.
Sure. So Sol Strategies is a publicly traded company in Canada. We've been listed since 2018.
You made it.
Yeah, exactly. And we're a Solana-focused public equity. We run validators under the hood.
All right. So I'm often asked this question, what's a validator? How do institutions interact with them? Talk to us a little bit about the business and the business model.
Sure, absolutely. So we run 3 validators at the moment. So there's 2 sides to the network in regards to business revenue. We make money from staking our own SOL, and our balance sheet is in SOL, as well as third-party stakers who stake on our validators. Both earn a different commission structure. So I'd say that that's probably the answer there.
Amazing. Well, Solana's had an incredible run in the last 12 months or so. What are some things you're most excited about in 2025? And if you were to have the best year ever for your business, what would it look like?
Yeah, look, I think we're in an interesting spot since we're the only public equity that's focused on Solana. So I think that there's, number one, investors in the stock market who want exposure to Solana. Success looks like being an active participant in that ecosystem. From a Solana blockchain perspective, I think that we're seeing immense development. I think it's really exciting. I think you're seeing a convergence with traditional finance. I come from the asset management world, and Solana is making a lot of strides. So I'm looking forward to that this year.
Well, it seems like Solana has been a huge beneficiary of all the meme coin madness in the last year or so. How do you talk to institutions about that? How do you convince them that some of this economic activity is to be taken seriously?
Yeah, it's a great question. Now, I think that does come down to investment appetite or interest. What is the interest of the institutions? Whether it's allocation or whether it's education, I think it's completely different. I think that there's still an immense amount of investors on the sidelines that actually also just went to the sidelines, especially in this risk-off behavior in this market. So how do I convince them around meme coin? If they're already asking that question, they're pretty down the rabbit hole. So then I think it's a conversation around the merits still of the base blockchain and also builders on that blockchain and how it can be used for rails of some of the funds that have already come out with products and structured products that they're going to be launching soon. But I think that, again, we're early days, no matter what, in this industry of getting institutional investors and allocators. You see that with the ETFs still aren't on most of the platforms. So even before we get those ETFs on the platforms, we're early days and nascent. So just debunk and talk through those conversations.
All right. Thank you very much, Leah. Next down the line, Hadley Stern, Chief Commercial Officer, Marinade. Tell us a little bit about Marinade.
Sure. So I'm the other Solana person on the panel, I guess, here. So Marinade is kind of considered an OG platform on top of Solana. Was created about 3+ years ago out of a Solana hack fund. And what's unique about us is we actually don't run any validators. Rather, we are a marketplace. You can consider us kind of a pool of validators. We started with MSOL, a liquid staking token, and about a year ago introduced Marinade Native, which from the words you can guess is a way to natively stake on top of Solana, still using our pooled validator model, specifically targeting institutional use cases, which is one of the reasons I joined the firm about 8 months ago.
I have a couple of questions for you here. I think it'd be helpful to define some terms and help everyone basically learn what some of these things mean. So define liquid staking for us. This seems like a very crypto thing, but maybe walk everybody through to get a little more comfort on what it is and how it works.
Sure. So liquid staking really was invented for the Ethereum blockchain and has also been adopted to Solana. But one of the reasons we moved away from it is we don't think there's as much of a use case or reason for it in Solana. But if we go back to the idea of a liquid staking token for Ethereum, you need a minimum of 32 ETH to natively stake. So I'm not sure the latest price of Ethereum, but let's say that's $100,000. That obviously does not provide people much access. And also the stake and unstake time for Ethereum is quite lengthy. So that led to the invention on Ethereum of a token that represented a staking position. So a liquid staking token, whereby instead of natively staking to Ethereum, you could just purchase a representation of a stake position with a liquid staking token, and the issuer of that token would handle redemptions, etc. So that's a liquid staking token. That innovation was also brought to Solana, and MSOL, which is Marinade's liquid staking token, was one of the first. However, on Solana, less of a need. You only need one SOL to natively stake. So roughly, I don't want to say the price. And the Solana epoch is only 55 hours.
Okay. Thank you. So what's your view on the long-term sustainability of these staking yields as more institutions come into the market and lock capital up?
Sure. So Solana is also a little unique and better than Ethereum, given that there's a higher inflation rate. And so currently staking, depending on where you are, is around 9 to 11% APY. I see that continuing in the short to medium term, but over the long term, likely the Solana Foundation will decrease the inflationary aspects of Solana, and you'll see some reduction there. I'm also going to steal one of the questions for Leah about meme coins very quickly, and just say that my answer to that is ignore what meme coins are and look at why they are on Solana. The reason why they are on Solana is because it is fast and it is cheap and it works at scale. So again, politics aside and meme coins, when the Trump token was released, the Solana network did about 10% of the NASDAQ volume in its first 24 hours. So when I speak to institutions about meme coins, I say ignore what they are, look at what Solana blockchain is enabling.
Yep, which is extraordinary high transaction volume.
Exactly, for the future of TradFi.
Very cool. Okay, we got some other questions for you, but we'll come back to them because we have to introduce our last panelist, Juan David, CSO and co-founder of Keyrock.
Thank you very much. Thank you for having me.
What does Keyrock do?
So Keyrock is a full-service financial institution. We are well known in the market for our market-making services historically, but we actually do a wide variety of financial services, from structured products and derivatives, DeFi, liquidity, all type of on-chain trading, as well as HFT trading on the top exchanges in the world.
So we have to talk about the new elephant in the room, which is obviously artificial intelligence and AI. How do you see the intersection between automation AI and decentralized finance, and what role will it play with market makers over the next 5 years? Is it a threat to the business? Is it an opportunity for the business? Talk to us about that.
We have done extensive research on what is the state of AI on chain, and when we're looking at this, we're mainly looking at the concept of agents, correct? We're looking at the idea on how do they take over execution and decision making. The reality of it is that at the moment the use cases are very poor. We have tried to really find and understand what are the few use cases that make sense. At the moment, it seems like very simple things where AI is just basically doing a statistical function seem to work, where they're very simple. An example of this would be liquidity pool range management. So you have a Uniswap pool, and then you have your range, and then the AI would kind of like process data and come up with the answer to what is the best range possible, and then rebalance it. The reality of it is that it's not significantly better than just running a statistical model that comes out with the best range and implementing it. So at the moment, we don't see it yet taking a lot of action in terms of, let's say, decision making for trading. We actually deployed some experiments on Solana where we took some agents and we tried to fine tune them to trade mint coins. In the first 12 hours of trading, they got rug pulled 3 times. So it's still a long way until they would actually be able to outperform and have a sound financial strategy for the moment. But in the long term, we see the value. We definitely see the value, but we don't see the value on replacing the whole value chain of trading, but mainly on taking over and simplifying the go-to-market of a strategy, making the research and development faster, leaner, cheaper, and therefore deploying strategies that may not actually use AI at runtime, but use AI to calculate the best parameters and the best way to like set them up for them to be efficient on chain.
Very cool. Well, the future is going to be exciting and I think a bit weird, but I look forward to it too. So I had another question for you. Regulatory uncertainty remains a key concern for institutions considering digital assets. How do you see market makers like Keyrock navigating evolving regulations, and what frameworks would you like to see that could create and generate more institutional participation?
So if you look at the regulatory side, I mean, there is more clarity, but it's also important to understand what aspects of regulation are being created and what is left behind. What is very interesting is that if you look at, especially starting from the European Union point of view, because it's the most advanced regulatory framework at the moment, and then going back to what's happening in the rest of the world, what you would see is that there is a consensus on regulation of marketplaces, correct? So exchanges are definitely going the route of requiring regulation. And then after exchanges, the regulator is going after stablecoins. What is very interesting is that at no point there has been a conscious effort to regulate DeFi. So what we can see is a world where we have a repeat scenario of regulatory gaps, but only to one part of the industry, where the centralized exchanges, the point of access and fiat to crypto rails are regulated, stablecoins are regulated, but then they kind of like close their eyes to DeFi for the moment. And in that way, we are in a very interesting moment in history, because as a market maker, we can really protect capital by following regulation, but at the same time, continue to innovate and test all of the great ideas that are being created on chain.
Nice. Okay, we're going to have one more question for everybody, but we'll start with Fahmi, Leah, and Juan. Beyond ETFs, what other vehicles such as tokenized assets, structured products, and RWAs, or real-world assets, do you see driving the next wave of institutional interest and adoption? And how's your company positioning itself to support these evolving needs?
So we're working with a number of RWA partners, but also institutional custodians with Midnight's launch program. So as part of that, we think about the large institutions, the large enterprises. For them to come into blockchain to hold an RWA token, they need to make sure that that asset can be shielded. Today, Coca-Cola aren't going to hold large assets on chain because anything they do on chain is a signal to their competitors or to analysts. So within Midnight, we're working with RWAs and institutional custodians, so those assets can have both a public state and a private state. The public state is the issuance of the token. How much tokens are in circulation? What is the yield potential on that? The private state is, I choose to hold it in my private wallet with my custodian, and I can selectively dispose it to other parties, exchanges, DeFi protocols, applications on a selective basis. Today, we all walk around with these lanyards. I know some people do that because they don't want their names to be seen. They want to be disclosed. They don't want to be disclosed. But if they do, they go this way. And then I've got my name, my company. At the moment, I don't give you my bank balance, and nor should you. And yet in blockchain, Bitcoin gave us that freedom, that decentralization, and we accept that everything we do should be public. For institutional adoption, and I've been there in the finance world and hedge funds for 20 plus years, you need to protect that. And it extends beyond RWAs. It extends to data around healthcare, data around deepin and other things. So I hear there's a lot happening in Midnight. And if you want to come and build and use that and work with Soul Ponds too, or any other ecosystem, we're open.
Yeah, Leah, would love to hear your views on this too.
Yeah, look, there's a lot of reasons that the ETFs have been so popular and so successful. One of the main reasons, obviously, is tax advantages and it finally having plumbing into brokerages. However, there are different vehicles that other institutional investors will want to see, especially if you start looking at other alternative currencies. So I think that, again, if we're looking, and the name of the panel is Beyond ETFs, Opportunities in Institutional Investments, you're asking, what type of structured products they'd like to see. I think that there's a bevy that still have the opportunity to come out, whether that's in an SMA structure or many other themes. So I think that we'll see that soon. You've seen Franklin Templeton. You've seen a lot of other large asset managers and shocks that have started coming out with on-chain tokenized funds on Solana and others, and are exploring other rails. So I think that there's a lot of vehicles that may come out and beyond ETFs.
Great. And I'll go to Juan to wrap up this question. What other opportunities do you see there?
I think I like to echo on the idea of the structured products and derivatives. I think the different asset classes are coming in slowly in chain. The way that I look at it is more like what's going to be the order. And you would say, okay, equities will be at the very end once everything else is on chain. And the first kind of like big use cases that are going to transition are going to be on-chain FX. And then you have commodities overall transitioning as well. So those kind of like easy cases. Then at the very end, you end up with equities. But in between, structured products bring stability to the market, correct? Like the market is very volatile. The biggest use case of the market is stable coins. So there is clear understanding that stability is important. And then you have structured products, swaps, and rate swaps that are required for the industry to be stable.
Hadley, I want to come back to you. Counterparty risk, liquidity, and regulatory certainty remain key concerns for institutions. How do you see institutions addressing these risks, and how is your company adapting to meet their requirements?
I mean, relative to staking, one of the an issue for ETFs is obviously end-of-day redemptions. So that's something that with native staking is a bit of a challenge to address with the 55-hour epoch time on Solana. We have some product solutions that we're coming up with to address that. But, generally speaking, in the staking universe, things are actually pretty straightforward. We like to think it's one of the things that the SEC needs to address. So the ETF applications that happened last year initially had staking in them, and then staking was taken out in order to get approval. And so we're still in this area of, I would say, known unknowns and unknown unknowns in terms of there's just generally tremendous optimism with the new administration, but also out of that, not yet any clear direction. So I expect as it relates to staking that we'll see some clarity fairly soon. I think it will be addressed first for Ethereum staking, and then hopefully that will set the right precedents for Solana staking.
I want to address a sort of an interesting development, which is there's sort of a different posture between Europe and the United States. The United States seems to be speeding up, and Europe, what do you think? What's happening? Do you see there's more opportunity in North America now? How are you positioning your businesses in this new market?
I wouldn't necessarily characterize it that way. So we launched a ETP with Bitwise in Europe. So that's a staking ETP powered by Marinade. So I think, look, the U.S. is the big market, right? And so I think it's less about who is ahead or behind from a regulatory standpoint, but the fact that we are a huge market given, as Leah mentioned, ETFs being tax advantage, brokerage accounts, that's much more of a U.S. phenomenon. The ETP and the ETFs in Europe and the UK have been more typically institutional. So it's kind of there's a different way to answer it. I just say the market here is generally much bigger, both in terms of size and opportunities for these types of structured products like ETFs.
All right. We'll have one last question for the panel, and we'll start at the top and go down. I think it's been a pretty extraordinary year. People are not bullish enough. They haven't remembered what we've been through over the last 15 years as an industry, and a pathway to digitizing finance is being paved in front of us. So putting on your hat of optimism for just a moment, talk to us a little bit about the things you think you're most excited about for your business coming into this cycle, and how are you going to position to help your clients be as successful as possible?
Well, we're a new chain. We're about to launch, so that's exciting enough as itself. I think what we find interesting when we speak to partners that we are, whether it's in Hong Kong last week, Denver this week, is finding partners who want to tell our story. That shows that what we're doing and what we're building resonates with them. The ability to have shielded disclosures within a blockchain, to be able to protect your identity, your assets, but also to have predictability around your fees. In every other chain, you have to sell your capital asset to transact. Within Midnight, we're going to give you that transaction fuel for free. And that gives you confidential compute power within Midnight. And that resonates with so many different enterprises on so many different levels, financial and otherwise. And that predictability of fees, and that ability to say, I want to protect what I own and show you selectively what I have so you can collateralize it or extend finance to me, really matters. And we're excited by that.
I think it's one of the things that's so funny because 12, 13 years ago, everyone was terrified that there was going to be not enough privacy or too much privacy in crypto. And now it's coming all the way back around for progressive disclosure with the right specific requirements. So we're very excited to see what Midnight does in that department. We'll be rooting for you guys. Leah, talk about your business heading into 2025.
Yeah, and I'll talk about a key component which I think is unique about what we're up to, which is compliance standards and security standards. So we're SOC 2 compliant, ISO 2500, and building other compliance tools under the hood. The one thing that, I believe is missing from, confidence from institutions to even, provide staking within their funds or do with their balance sheet generally across the board is a confidence in compliance. And that being able to plug in and be able to attest to that. So we've already announced a couple partnerships recently with institutional providers and other publicly traded companies. And a lot of that is because of the compliance tools that we're building. So I think that, as that continues to be built, the ecosystem continues to grow, I think you're going to see a lot of folks joining Solana.
Very cool. Hadley.
Someone say Solana. In a similar way, Marinade started as a retail platform. We pivoting to the institutional market, also going through SOC 2 and those compliance pieces. I think, what I find most interesting about what we're doing and also what Leah's doing is less about the price or the APY that you can get from Solana, but really we are building the future infrastructure for, the blockchain network that we believe will be the most dominant. So when we talk about staking, it's exciting to talk about APY that is leading. It's exciting to talk about the security of the asset with Marinade native staking. But I think it's most exciting to say that this network is going to be the network, I believe, for TradFi and for so many different use cases. And proof of stake and validation services are critical to that network. So it's more about building the next infrastructure layer for the world.
All right. Last but not least.
I'm going to go with the idea of on-chain asset management thing that we have seen over the last 6 months. Very rapid growth of allocation into Vault on-chain. And for me, this is a very positive trend because it's the beginning of real wealth creation and preservation of wealth for the masses. Crypto has been, associated to speculation and to a lot of wealth destruction. And I think this is the moment where that switches and it just creates healthy yield for majority of people.
All right. Well, I want to thank my panelists and I want to thank our hosts here in Denver. You heard it here first. We're really grateful for everyone's time. We hope everyone has a wonderful weekend and make sure you stay hydrated. It's a lot worse than you think if you don't. And on behalf of blockchain.com, we're on a path of taking the company public. We're excited to be working with our partners, some of whom are on stage and around the audience tonight. So looking forward to making connections. We've got some of our team here. We've got Al from our market making group, Matt from our institutional team, and T-Mac from our trading desk, among others. And welcome to Colorado and have a great afternoon.
Thank you, everyone.
Thank you.